I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market finally managed a good up week last week, following 7 weeks on the downside, when the S&P lost 13% and the Nasdaq cratered by 20%, and many stocks were much worse. After this very weak period, it makes sense that the market would try to move to the upside, as many stocks seem like bargains, big bargains. Monday saw a surge on the upside led by the banks as JP Morgan gave positive guidance. And Tuesday, well, that might have been the real tip-off that the market was ready to bounce, as Snap got killed. It was down 43%, and the social media stocks, those that were susceptible to declines in online advertising, followed big on the downside. There were sizable declines in Facebook and Google and Roku and Etsy and Pinterest, which was down 25% early in the day. The S&P 500 on Tuesday was down 100 at the worst level, but then the buyers did come in, and it ended up only with a small loss. There was really more of the same on Wednesday. There was a brief decline that came as the Fed minutes were released, and then the market regained its footing and moved again to the upside, gaining about 1% on that day. The Fed said, well, inflation is still hot, of course, and they're talking about raising interest rates 0.5% in each of the next couple of meetings. And they attributed the rally, that's the analysts, to the fact that the Fed didn't say they were going to raise it by 0.75 points. Well, that's total nonsense. The market simply wanted to bounce. But what it did prove, basically, and what the inflation numbers have proved all along, is that to become a Fed president, get on the Federal Reserve, you simply have to have the right credentials. But what they're proving is that they make risk. They don't remove it. And the risk that we've seen have been in these giant swings in the market that I talked about in the last 25 years that we showed in Market Week last week. More proof of the fact that the market did want to rally is that NVIDIA came out. They beat on earnings, but they guided down. The stock moved down pretty sharply early on, but then had a big reversal and went from big down to big up. Thursday saw retail rebound. Retail's been getting killed recently, and that came on a strong report from Dollar Tree. Now, Dollar Tree moved up 20%. Dollar General followed it, moving up 13%. Lulu gained about 10%. Those big gains came for the dollar stocks because it does appear that higher inflation is good for them as people stop moving into the big boxes or the Walmarts or things where prices went up, and find that the dollar stores give them better bargains. So the indexes, they moved up sharply, and that was despite the fact on Thursday that pending home sales were the weakest in 7 years, and those numbers have come down 6 months in a row. But again, we're in a period now where bad news is good news. That might not last real long, but that's where we are. Friday, we saw the Fed's favorite inflation gauge, the PCE, Personal Consumption Index, was up at a 40-year high, up 4.9%. The last 13 months have seen that PCE over their 2% target, and that doesn't move that quickly, and that is very high. I'm sure the Fed is looking at that. Costco came out and their same-store sales missed, and analysts got a bunch of downgrades. But still, the bargain hunters are here, and world markets followed through on the upside after big gains on earlier in the week. And here we are at midday with the S&P 500 up 67 points. A very, very strong day. The stock market, well, that began a rebound. Actually, we talked about that there was a rebound coming, and this one has been trying to form since around May 12th. Our analysis had suggested that we'd see a rally that was in May and into early June, and that period would be a relief rally, all existing, of course, in a bear market. This one started very slowly, but now when you look back from the intraday bottom in the S&P 500, it's gained already 300 points. So this has already become a very significant upside move. For those of you writing to me in social media and emails and telling me that this is the beginning, it's all over. This is not a significant bottom. None of our analysis suggests that. So that's very low odds. No, the bull market has not resumed. And those levels seen at the peak, well, they're a result of a massively inflated economy, massively inflated price levels at 200% to GDP. Those levels may not be seen again for years. The Fed and the government, their period of idiocy is over. We're not going to see any more money being thrown away, the trillions thrown around as the government did. And of course, the Fed now is trying to regain their credibility, and they're going to be raising rates significantly and now reducing their balance sheet. So it's just the opposite of what we saw. So those levels that we saw in the market, I mean, the probability of getting to them in the next year is extremely low. I'll show later on more of that in the show, what levels to expect in this rebound, where it will go and where it will stop, and how the mega caps support the analysis as we're going to look at the Nasdaq. For the week so far, it's been the best week since March. The major index is up 5 to 6%. The transports, I think, are up around 7% right now. Bond market, slight gains. The 10-year yield's now falling for the week about 7 basis points. We had a target for a decline in there of around down to about 2.6%. It's now at 2.73%. And we do expect that the bond market does have some more upside here in this period. Gold market gains about $13-14. Silver gains about 38 cents. I want you to make sure you watch Future Speak. That's our Wednesday show for level 2, 3, and 4 members. This is a very important time for gold and for silver, and you're really going to want to see that analysis. The dollar loses about 1.4%. That's timely based on our analysis, and you must watch Katie's analysis on the euro coming up, which of course is inverse to the dollar. Oil gains about $3.70, and it's at a tough level right now. Though I want you to key in on $116. That's a pretty key level where we thought it would meet some resistance. But if it is able to get through there, and it's not far off right now, so a close through 116 could get it to pop very quickly up to 123. Coming up, Avi is going to give you a preview of what we show in Future Speak, and he's looking at Bitcoin. Katie is going to do some great analysis on the euro currency, which of course is inverse to the dollar, and I think you're going to really find that excellent. And Matt is going to introduce to you our level 1 memberships. If you're not a member, then you're going to want to see this because it's really a membership that you get fantastic amount of information in, whether you're an intraday trader in the indexes or even an investor. There's something there for both. And I think you're going to want to see that. Just an introduction. He's going to show you some of that content and services. And then I'm going to bring you analysis on the stock market. We're going to look at the Nasdaq and the mega cap stocks and the synchronicity in there and look at when and from what level the bear will resume. And of course, I think it's going to resume in a very big way. please do go to our website, askSlim.com. Look around there. There's so much for you to see. If you become a free member, you'll get notifications about when this show comes out. On YouTube, subscribe to the channel. We put a lot of stuff out there all week long. And if you want to get notified, click that notification bell. And do, of course, like this video. Give it a thumbs up. On Twitter, follow us at askSlim. And for any questions on any of our memberships, info on our huge offerings of education and analysis, you can write to Matt at askSlim.com. All right, this is a special. This is our preview of our Future Speak show that we're going to show you. We look at 26 different markets in that show. It takes over an hour to do. It's just an amazing, comprehensive classroom that we give on looking at all of these 7+ segments of the futures and index markets. And this is just a preview of that, as we're going to show you the work that Arvi has done here on Bitcoin.
Again, for Bitcoin, we have a dominant cycle broken up into minor thirds, and then this out of phase cycle, which is very much in play in dotted blue. And Bitcoin is in a very risky time period here. You can see we have already violated this key weekly low at 32,855 in a corrective period right here, with this dominant cycle pushing down on the downside. Now we have an out of phase cycle that's due to bottom right here. So the odds would favor a rally that forms a bear flag in the context of negative momentum that you see right there, and then we get one more washout on the downside to complete this dominant cycle. The next key low in Bitcoin is due around this middle part of July, or middle to end of July time period here in Bitcoin. And this period looks a lot like this period right here, where you had this bear flag in the context of negative momentum that turned down sharply. So watching for something similar, and then for this to get hit hard. The levels on the upside come in around 34,000 to 36.8, and we have a 61.8 at 39.5, and very likely for this to sell off further. Again, we have a super major level down here at 18,375. Shift over to the daily chart. Again, we have the Bitcoin cycles in blue, ETH cycles in green. What I want to focus on are these minor cycles. So I'm going to zoom in. Okay, so we have the ETH cycle that was due to bottom, as I just mentioned, no clear bottom in place. Bitcoin, let's focus on these minor cycles that you see right here. I'm going to draw them on the chart right here. These minor cycles. That is this money flow pattern right there. Okay, so what do we see here? This is in a rising phase, going nowhere in the context of a bearish ribbon. And what are we seeing? Bearish signals on the PO, bearish signals on the PO. So we're watching for this little bit of a triangle to actually just turn back down on the downside into this next timing, with our next low here due in the early to middle part of June. So that's the overall picture. Watch for rallies to fail, and then for this to get hit hard back on the downside. There are minor sell zones from 32,054 to 34,260, and then 61.8 on the minor at 36,342. So those are the levels on the upside in Bitcoin. Over a bias here is clearly very negative, and we are watching for lower prices here going out in the short term into this 610 time period. And if we look at this shifted cycle has a key low that's due, if I highlight it right here, in the middle part of June, early to middle part of June, very much in sync with what I just mentioned here on that weekly time frame in that middle part of June. So look for that washout low to form around that time period according to both our weekly and daily cycle analysis.
Great stuff there, Arvi. That was really good. I just want to put a side note in here. Of course, the crypto market is related to the NFT market, non-fungible tokens. I just want to tell you, there is simply a crash that's been going on in FTs, in the NFTs. And that, of course, is very linked to what's going on in crypto. Volumes of transactions in NFTs have dropped off by 90%. Sales volumes down about 90%. And if you just look at, what really made history was the first tweet ever. The NFT, somebody who bought the rights to that, to that image of that tweet, who paid $2.9 million for that. We tried to resell it. The highest bid for that was $14,000. Well, they canceled that auction, but that just gives you an idea of the just ridiculousness around these sectors in here of cryptocurrencies and NFTs. And I think the crypto NFT fantasy is over. So you saw on here RV's analysis, which showed you it was that Bitcoin was likely to move down to a level that was near 18,000. I think that's going to happen, and I think that's really high. So that's a look at Bitcoin and my little add-on there about NFTs. This is a look at multiple time frame analysis of the euro currency. Important analysis in here that Katie is bringing you, of course, because it so relates to the dollar. And she is doing this by referencing our service for our level 3 and 4 members, the cycle low timing tracker. And you're going to just find this really valuable.
Hi, I'm Katie with askSlim. A few months ago, we launched a new tool for our level 3 and 4 members. It's called the Cycle Low Timing Tracker, and its purpose is to call our members' attention to opportunities that may be setting up around cycle lows, both coming into cycle lows and coming out of them. The opportunity that I'm going to highlight today is in the euro currency, symbol /6E. Now 6E is appearing in several places on the cycle low timing tracker. It appears in the cycle timing box and in the bottom pending box for the weekly time frame. That means that it's currently in the weekly cycle timing window and has had enough positive price action to trigger the algorithm to tell us that an intermediate term low is likely forming. It's also in the in sync box, which means that its current daily cycle ends within the weekly cycle timing window. So let's take a look at the chart of the euro currency and I'll show you. So this is a 5-year weekly chart of the euro. These cycle brackets on the bottom are a drawing tool that helps us to identify the cycles. And here is the latest cycle just ending. Now, the weekly cycle timing window is the time period between these blue vertical dashed lines when we expect a cycle low to occur, and we're right in the middle of that time frame and moving up. Now, because this previous cycle was negatively configured, which means that it ends lower than where it began, we do not expect the euro to take out that prior cycle high. The probabilities favor that we will get into this resistance zone up here and then start to have some trouble there. That resistance zone is between about 108 and 111. You can see our projection to the middle of that zone around 109.5, and then if it's stronger than that, we would target the top of the zone at 111. Also, momentum, as represented by our proprietary reversal scout, is still negative. We expect that to start curling up, and we'd like to see it turn positive. Switching over to the daily chart, this is that advance that we saw on the weekly chart. Now the reversal scout on this time frame is showing positive momentum, and the slim ribbon, which is another proprietary momentum indicator that we use on our daily charts, has gone from negative to neutral and about to turn positive. So we are currently in this upper resistance zone between the 61.8% bib and the 78.6% bib. We formed that resistance zone from the previous cycle high and low. And if we can get a mid-cycle or end-of-cycle dip into this rising support zone, which currently is between about 106 and 105, we would consider that a good long-side opportunity for another upside move. Now, of course, as the euro moves higher, these levels will also move higher. The time period around the end of the cycle when we would expect the current cycle to make its low is between June 9th and June 17th for a high probability long side trade in the euro. So that is an example of how to use the cycle low timing tracker to identify opportunities around cycle lows, and it's why it has become so popular with our members. If you'd like to learn more about all of the tools and services that we offer, please visit our website at askSlim.com.
As always, Katie, really great work on that. So thanks for showing that. And that cycle low timing tracker is just a must for people that, well, want to have a good sense around those key lows and how to trade right around them. Great work. Coming up, I'm going to give you our analysis on the stock market. But first, Matt is going to introduce our level 1 content to you. This is really amazing. It's worth sitting through and watching this short video, especially if you have not been an askSlim member, because you're going to see great things that you get for just a very minimal amount of money for our level 1.
Hello, fellow traders and fans of technical analysis. This is Matt with askSlim. At askSlim, our premium memberships are designed to deliver world-class technical analysis services, education, and support for active traders and investors all over the world. At askSlim, we are pure technical analysts. We are bull-bear agnostic, and we let the charts do the talking. We utilize Slim's unique cycle analysis, which has been developed and continuously refined over the past 5 decades. We combine it with custom momentum studies and swing high, swing low techniques at multiple time frames. The askSlim methodology generates analysis that allows us as technicians to project in time, price, and direction. Over the next 4 weeks, we will be highlighting each of our premium memberships. Today, I'm going to briefly focus on Level 1. Level 1 is an excellent introduction to the askSlim methodology, and it provides a comprehensive look at the S&P 500, the Nasdaq 100, and the Russell 2000. It features the askSlim Daily Technical Snapshot, which is designed to support active index traders, the ETF Review, which is a deep dive into key sectors of the S&P 500. It offers access to our live bi-monthly webinars with the askSlim analyst team led by Slim. Finally, it features the Slimulator Momentum Tracker, where you get access to over 1,000 symbols for active investors, where you get to see our proprietary askSlim momentum algorithms in action. All right, let's go get a quick tour of Level 1. Snapshot. The Daily Snapshot is published each trading session a few hours after the close of the regular market session. It is a comprehensive technical review where we apply the askSlim methodology to the S&P 500, Nasdaq 100, and Russell 2000. It is designed for the active short-term and intermediate swing traders who look to use the major indexes as a proxy for their trade planning. All right, so there's several sections to the Daily Snapshot. I'm going to take a look at a few of them. In section 1 here, we provide a summary, a technical summary, where we cut through the fluff to get to the main stuff you need. We summarize the technical conditions, including directional bias, cycle timing, key price levels, and where things could change. In the next section, we go and we bring you a custom look at our askSlim charts for each one of the indexes that showcase our proprietary momentum indicators, annotated with our key technical insights like important support and resistance zones. These include the 2-hour, the daily chart, and our weekly chart. All of these are hand custom crafted each trading session, and we post them into the Daily Snapshot. In this next section here, we apply our analysis for assisting with thinking through the trade planning process, for determining upside and downside price projections at multiple time frames, and those include the short-term outlook, an intermediate outlook, and a longer-term outlook. Let's take a look at the short-term here. So you'll see we have an upside price projection and we have a downside price projection. We review and update these each day. Next, we're going to take a look at the askSlim ETF review. That's this one here. Each week, the Select Sector Spider ETF review is published, and we have this published for traders and active investors, and we provide a broad technical picture of the XLE Energy, XLF Financials, XLI Industrials, XLK Technology, and XLP Consumer Staples sectors, where we feature our custom annotated daily and weekly charts and key actionable technical insights. So I'll take a look here at the XLE Energy, where you can see that we publish our weekly chart with our askSlim cycle analysis, momentum analysis, and key levels. We do that also on the daily chart. And then we have a technical overview where we give you a summary of the technical conditions. And we also give you some key upside and downside technical insights to work off of for your trade planning. Finally, as part of our level 1 tour, I'm going to give you an overview of the Slimulator Momentum Tracker. The Slimulator Momentum Tracker utilizes our proprietary momentum studies and provides you with momentum readings on more than 1,000 stocks and ETFs. Using our custom algorithms, the Slimulator Momentum Tracker generates a directional bias and outlook from the momentum conditions of 3 time frames designed to support active investors and longer-term swing traders, short-term, intermediate, and long-term. We have several pre-established watch lists that you can generate these readings on. I'm going to go to the Select Sector Spider ETFs. And what you can do here is based on the short-term, intermediate, and longer-term. Now we have weighted the output here for directional bias heavier in the intermediate and longer term. So those algorithms are more heavily weighted. And then we generate an output in terms of a directional bias, and you can sort that through the symbols in any one of those custom watch lists from very bearish to very bullish. And so I'm going to take a look here at the XLE, and I'm going to look at the chart here. So the chart here, what it does, what's interesting is that it does a stamp when there are changes to the directional bias. And you can see here that any change that has occurred has been on the positive side. So it has demonstrated that the overall condition for the XLE has been bullish or very bullish now for several months. In the opposite way, you can see here, I'm going to take a look at the communications sector. We'll look at that chart, and you can see that it started to warn us back here in December of 21, where it went slightly negative, and then went back to mixed, and then it went slightly negative, and then there was some stronger warnings coming in that something has changed in terms of that longer term momentum condition, which was really right on the money as it went into a deeper downtrend after that came in, and it has not suggested a change as of yet. So I hope you enjoyed this tour of level 1. You can reach out to me at matt@askSlim.com for any special offers.
Thanks for showing that to us, Matt. Just love seeing that really fabulous content. All right, this is the stock market, my review for the week. Every week I do something on the stock market, and sometimes I look at the S&P 500, sometimes I look at daily and weekly, sometimes I look at all of the indexes. What I wanted to do today was show you the Nasdaq on the intermediate time frame, really looking at the next up to 5 months out. And I want to show you the synchronicity that's in there when you look at these 5 heavyweight stocks that are in the Nasdaq. So let's start out by looking at the Nasdaq. I've got Apple up here, but I want to switch over to NDX for you to see that analysis. Here is, let me get this to switch over here. Here is the Nasdaq, and I want to show you what I'm going to look at, compare against, are these five of the 10 stocks right in here. So these are the 10 top weights as of today: Apple, Microsoft, Google, Amazon, and Tesla. And I'm going to show you the analysis on that and how that relates to the analysis on the S&P 500. So let's take a look right in here as to what we're looking at. And this, for those of you that are new, is cycle analysis. On the bottom are cycle brackets, which help us as a guide to the rhythms in the market, the money flows. And when you have a money flow that is moving up so strongly, and this is our momentum indicator, the reversal scout, and when it's moving up so strongly and you get to the bottom of a cycle and it only has a small time to correct, that's all it does. It comes down a small amount of time. This is called a positive configuration and right-hand translation. Just absolutely perfect when you look at that in the Nasdaq. So you had positive cycle, and then you had a breakdown where it made the top. That's the key part of this analysis right now, is that we really saw the bull market end right up over here when you had that engulfing pattern and then this evening star pattern. That was giving the warnings, and then you see that little red arrow. That's where momentum began to turn down, and that peak was made. Once it broke underneath this low, it was what we call a negative configuration, and this peaked on the left side of this big cycle right over here, which means it's called a left-hand translation. When you get left-hand translations and then breakdowns, it tells you the conditions of the market and how weak it is. Normally when you get this type of a shape, and by the way, that decline was down 22.3%, you get big rebounds, as you can see, but when it fails right in that resistance zone, that area that would be considered a sell zone, and then begins to move down and the momentum turns negative again, it shows you how bad it is. Again, it breaks down underneath that key low right over there, and then what that tells you is the market's in a lot of trouble. This is the minor cycle in here. Now, this has been, the harmonics in here have been between 8 and 24 or 9 and 27. Right now we're looking at 9 and 27. This is the minor cycles as you see them right in here. And the bottom forms right in here. This might have been a week later than we thought, down 32%, as you can see right there. That is an important time frame. Now, our analysis that we've discussed for weeks and weeks was that we thought that there was going to be a rally that came on this minor cycle right over here that would come in May and into early June. Well, that's coming, and you can see this rally in here, even though it started a little bit later and maybe got a little bit deeper than we thought it would. We still have a condition of negative momentum that you can see right in there. So we're getting a rally. This is the major 23% off of the major top. That comes in right over here around 12,740, let's say. This next area here is 12,900. That would be the right in here is about the lowest we would expect it to stop, with a pretty good possibility it can get up to 13,558, which is that middle level right over there. We would expect that this would be able to rally into June and maybe rally into sometime even into late June if it wanted to do that, before it then turned down. And when it turned down, it's likely to turn down in a very significant way. So what would be the target that we look for right over here? Well, all of our indexes are nested right in here, and that's between these two vertical lines is where the nested area is. That's the time range is in sync in all of the indexes, sometime between early September, let's say, and October here. So we're looking for September, October as the low in the bear market. You can see in here what the downward trend looks like in this channel, and it's likely to get up here into this sell zone and then turn down again. So you would see that the rally time frame right in here is right in here, and you would get a rally into these areas here. It would then very likely fail and then move down sharply and very likely get below this level after that of 11,500. That's where that low was, down 32%. Now this that's the major 50% level that it got down to right there, and you could see it got some support. The next level right down over here is pretty likely, and that's at around 10,600 on the Nasdaq. That would be our target right now for this period. That is in we'll call it the late summer or fall for the Nasdaq. So what I want to show you is the synchronicity in here, looking at the key 5 most heavyweight stocks, and you can get a good idea of that. Let's take a look in here of Apple. AAPL, and we're looking at weekly cycle analysis in here. And this is really cool because you can see that in each of these cycles, and we don't do this all the time, we put in target areas of where we thought the declines would come down to. So over here, we thought that the March target would be 115 to 118. Right over here is about 116, so it got very close. Here we thought the August-September target would be 137 to 140. That's this correction right over here. We got down to just under 138, close to 137. So that was spot on. The March-April target we thought would be 165 to 160. That was right, getting down right in here. But then we lowered it to about 148. This low right over here was just under 150. So you can see how close those got. Now we have this September-October target between 130 and 138. It already got down over here to 132 and a fraction. This is the sell zone up right over here, and you can see it getting close to it. So we believe that the target right over here is at about 127 right now. Again, we're targeting September, October. So this is in synchronicity with what we showed you on the Nasdaq. This right over here is showing the reversal scout, which is in negative condition. It's going to take some work to really turn that up, and I don't think that's going to happen. And again, the sell zone in here, 150 approximately to about 156. I would expect it to get there. On the outside here is about 161. I doubt that. But again, we think that this has a few weeks left to go and then likely to turn down again. So that's a little more involved look at the Apple price with a target now in the fall of getting close to about 127 after it's already made our targets. Let's take a look at the other 4 stocks in here that make up the top 5 weighted. Here is Microsoft. You can see the exact same thing going on that I just showed you in Apple. Negative cycle, a breakdown, a projection out over here that takes you out down to about 240 out in the September-October time frame. Getting up close to the sell zone right now, 273 up to about 280 with an outside chance up here at 289. You see how fast it's getting up there. It actually hit the fib target zone right here and then likely to fail in here after a few weeks and then begin to move down very sharply. So that's a look at Microsoft. Let's take a look at Google. Google actually is in the 3rd weighted position, but you have to add the 2 symbols, GOOG and GOOGL. This is very similar, as you can see. It comes down and nails that 161.8% fib extension. There's another one down over here, the 162.8, which is way down here at close to $1,500, $1,520. Here's your sell zone right up over here, 2360 to about 2460. So there's like a $100 range in there. It's still got quite a ways to go, and we think a few more weeks. Again, momentum in here is negative on that reversal scout. You can see all of these positively configured cycles. Then once it broke down here under that level, the top was made. The head and shoulders top formed, and now moving down very significantly, as you can see there. Just to take a little closer look right in here, and you can see that projection down there, potentially back down all the way to close to $1,500. Sell zone, well, still got a ways to go. Maybe we can get some further rally on the upside. Amazon, AMZN, is the next, the 4th weighted stock. Almost identical. You can see the sell zones in there. It moves through that projection zone that we had right in there, hits the 127. Here's the 138 down there. And if it wants to go to the 161, well, that's the target range. Just under 2,000 here, and potentially down here to to about 1,650. If it's able to keep the rally going, now this is the 23.6. You can see that Amazon is actually weaker than some of the other ones I'm showing you. It could stop at around 2350, and then right over here is 2550. So those are the levels we think it'll get up to, but then again, rolling over and getting hit very hard again after that. Give you some sense about this bear market and where this leg of this major downside move, where it's likely to stop. Here is the Tesla market, a major top likely formed in there based on the fact that this cycle right over here gave up about 90% there. It rallied all the way up here to the 78.6 and then broke that low. Hits almost the bottom perfect of that target zone, which is the 100% fib extension. Here's your rally level right over here, around 820 to about 880. That's what we would expect as a potential in here over these next few weeks. And then moving down again sharply. Our target down over here is at around under $500, maybe $464. And I'm sure there are people just gasping at the thought of that happening. But this is a really bad pattern. Again, momentum in here very negative, as you could see, and very susceptible to failures, and then moving on the downside. So again, back to the Nasdaq, this all compares to the same thing we showed in here. This declining phase out over here into the late summer or early fall. These resistances over here that we're talking about, maybe another few weeks before this minor decline takes hold over here, then maybe another little rally, and then another big sell-off over here. There would normally be, I don't have any of the yellow, really risky periods of risk, but that really comes out over here into maybe sometime around the beginning of August out into early October. That's where the really risky period is, where those nested lows are in all of the indexes, as you could see us pointing to right over here. That low right over there at 11,450 something, it's destined to be taken out, and maybe in a significant way. Of course, nothing is written in stone, but these are the highest probabilities. I wanted to show you that when we look at that. Now, we talked about this rebound in here in the stock market, and that we said the shortest term indicators would then tell us that it was going on. I want to show you the askSlim Market Monitor right here, and this is for level 4 members. It's got 4 proprietary indicators on there, and you can see in here the SPY, QQQ, IWM, the Dow Jones Industrials, the Dow Jones Transportation Average. The shortest term and most sensitive indicator is the reversal scout, and that turned green. You might even get the slim ribbon to turn green in here. Actually, IWM has already turned neutral, and that's the best pattern of the short-term patterns. But the OBI, that's going to be really tough to turn. And also the MCI, which is heavily weighted by longer-term, the longer-term variables that we put in there. And you can see in here the IWM, it's at -20. That's actually the best one. So IWM has the best short-term pattern. I wanted to show you that we talked about what would happen, and that the shortest term reversal scout would turn positive when we thought the correction was on the upside was on. This upside correction is on, as we show you that in the Nasdaq. So that is a look at the stock market. As you could see, the heavyweights in there are super supportive of the analysis that says that it's got some more room on the upside. You're likely to get some rallies up to those levels that we talked about, but then it is very, very likely that there is a big decline to follow. And if you think that there's been wipeouts in a lot of these stocks, I think the rebounds are only going to set up additional wipeouts on the downside on a lot of these stocks. So that is a look at the stock market with the focus on the Nasdaq. So I hope that you found that illuminating. I want to remind you to go to the askSlim.com website, and if you don't know what level 1 is, go back and watch Matt's introduction to level 1, because there's really good informative stuff on there for either short-term traders or even investors for very low price. Or look around on the askSlim site, become a free member if you wish. On YouTube, subscribe to the channel, click the notification bell, and you know we post. And do give us a thumbs up for this video. Watch the member videos in our playlists in the past shows. I think that will help give you an idea of things that we do. Follow us on Twitter at askSlim. And for any information on our content, educational offerings, analysis, write to Matt at askSlim.com. That's it. Again, I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.